comes down to computers communicating.
The information superhighway can be a confusing mix of on-ramps and off-ramps.
Bitcoin is worthless artificial gold.
Is it still rat poison?
Probably rat poison squared.
We need to get into the world of, okay, this is actually foundational technology.
What the Internet of Money does is it creates a single network which can do a microtransaction to a gigatransaction.
The Internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash.
Alrighty, gentlemen, welcome back to Final Settlement. Today is Wednesday, March 12th, 2025. Not a whole lot to talk about. Not really anything happening in the Bitcoin space. Would you guys agree? With me today, my co-hosts Liam Nelson, Michael Tanguma. We've got Tim Cotman on the show today and Chase Palmieri from Acropolis. But boys, what's the temperature out there? Price is kind of going sideways to down. But the United States is embracing Bitcoin as a reserve asset. What do we make of this?
I'm excited for today's podcast. I've been looking forward to it, given since we've last chatted, or since 3 days ago, we have or four, whatever, we have a largest sovereign putting Bitcoin on their balance sheet. We have regulatory climate changing. Folks on this call were in DC yesterday. The macro market is flying around. MicroStrategy, I think, just announced they're going to put $21 billion more somehow. They're going to buy all the Bitcoins. So there's no shortage of fun stuff to talk about. Yeah. That's a laundry list of events in the past week or so. I think maybe the logical place to start is the executive order from late last week. Kind of old news at this point, but still pretty important, I would say, in my mind. The United States is embracing Bitcoin, recognizing it as a strategic reserve asset. They've effectively committed to a few things. So the setup of a strategic Bitcoin reserve, where that will predominantly hold the Bitcoins we already have. There's an audit that needs to take place. Sort of insane that we don't know how many Bitcoins we have. But that seems to be the case. So we got to track those Bitcoins down, see what we have. The idea is that we will hold those and look to acquire more in budget neutral ways. There's been a ton of talk on X and elsewhere about the myriad of ways where we could accumulate Bitcoin in budget neutral ways. I think Saylor responded to David Sachs' announcement on Twitter saying, "I've got a few ways to accumulate Bitcoin in budget neutral ways." So there's that playbook. There's other sort of facilities or assets that we could leverage to do that. But I guess the other component of this was the digital asset stockpile, which I think got initially a little conflated in weeks prior. Of there was talk of a crypto strategic reserve. It wasn't really clear what that would look like. Was there going to be a delineation between Bitcoin and other assets? The takeaway is that there is a delineation between Bitcoin and other assets. So I thought, to me, that was one of the more positive things from this announcement, generally speaking, was the United States government saying Bitcoin is special, Bitcoin is different for these reasons, and therefore we are not only holding the Bitcoin, going to look to acquire more, and for all these other assets that we've seized over the years, we're going to hold those for now, but we might sell them, and we're definitely not buying more. So that was a massive signal to me. I think one of the first major signals from this administration that they understand Bitcoin is special and different. But the price, I think what most people are talking about in the days and week post this announcement, the price has kind of gone sideways to down. Now I would say a lot of that is probably related to broader macro forces. Liam, I'm curious if you have any thoughts on this. I know you had written up some stuff for a newsletter around this, but any thoughts on is this just Bitcoin getting caught up in risk off sentiment, generally speaking, around all the activity around tariffs, just general uncertainty? I think that's what's back in the market is uncertainty and a general risk off sentiment. So any thoughts around that?
Well, kind of before touching on price action for a sec, just wanted to take a step back and the David Sachs, who is the AI and crypto czar, is essentially, he put out a tweet and said, over the past decade, the federal government sold approximately 195,000 Bitcoin for proceeds of 366 million. If the government had held the Bitcoin, it would be worth over 17 billion today. That's how much it has cost American taxpayers to not have a long-term strategy. And he is implicitly understanding the opportunity cost of not holding Bitcoin. Anybody who dismisses or sells Bitcoin automatically realizes how much more they would have had they just held onto their Bitcoin over a long time period. And I think over a longer time period, we keep on hearing that Bitcoin is the hurdle rate, and we're starting to recognize that the government sees that too. I thought it was super interesting that they announced budget neutral ways to acquire additional Bitcoin. And some of that, which David Sachs talked about on the All In podcast, was selling other cryptocurrencies in order to buy Bitcoin. And having Howard Lutnick in charge of that is definitely going to accelerate that. But in terms of the price action immediately following the announcement, I think expectations were just a little bit too high. They thought the government was going to go out and immediately acquire Bitcoin themselves. In addition, there continues to just be a ton of different macro forces like higher Japanese bond yields, rising delinquencies across, consumer credit, mortgages that are giving investors some pause. But in general, this is not to be taken away that this is a monumental shift in terms of the U.S. government understanding the opportunity cost of not holding Bitcoin long term and putting that into an executive order.
Yeah, on the pricing side, I want to throw it to our buddy Timbo here. I guess he updated his name. And, if you went on his Twitter, you'd have no idea that price. You would think that we're probably, north of $200,000 to $300,000, because I just keep seeing in my feed 1 million by 2025 and 2 million by 2026. So, Tim, curious, what your reaction was seeing, the announcement, and what do you think's coming next?
Well, when you walk with Michael Saylor a few blocks along in D.C. during a beautiful day and talk to him for 5 minutes, you have nothing to be other than bullish. But even before that, I just think there's so many encouraging things happening in the market that we'll get there. It's only March. It's still Q1. And just whether we get to 250 or 500 or a million, the fact that I can post those things, they get 250,000 views and 500 comments, and most of the comments are telling me how much of an idiot I am. That's interesting to me, right? Not because I think I'm wrong or right, but it's a lot of people with a lot of opinions, a lot of people with a lot of time on their hands. But I think the more that you engage with the community, you go to these events, like I'm sure we'll get to the DC event. It's just very encouraging to have now bills both in the House and the Senate, 6 co-sponsors with each one. Senator Lummis on stage saying that the president's behind this bill to acquire 1 million Bitcoin over 5 years. You got Saylor on stage after that saying we should buy 5 million. I don't know. Those are not reasons to be bearish. So, interesting times.
Yeah, it's super fascinating to think through, there's the things happening in the public eye when it comes to diligence and driving to consensus and governance, from a state level to the sovereign level. And then obviously, if individuals work in this industry, they're having these conversations as well. And it's just this reality. And we talk about this a lot. It's why Bitcoin will generally be driven almost always or for a very long time by the individual, just simply because it's a consensus of one. So they can always ape into their whole, net worth, family office, very similar to switching their custody model, where these large groups, there's just so much. And this is part of this podcast, is talking about treasuries and what Chase and Acropolis and Tim have been working on his podcast, is that these groups are just I don't know, there's probably not the first inning, for some first inning, but others that we're talking about, they're in second, third, fourth, where they're going through the process, but they just aren't ready to start, from a liquidity perspective, making those purchases. So it's going to be very fascinating to see when that all kind of converges together. Yeah.
Yeah. The other thing that I've been thinking about the past few days is, and I think we said something similar, sort of like post ETF launch, when we saw similar price action, where after the ETFs went live, it was sort of maybe sideways to down before it really started to pick back up. And I think at that time, we had mentioned on one of our various pods, like, this feels like on a risk adjusted basis, like the cheapest Bitcoin's ever been, given the trajectory that we foresaw. I think you could say a similar thing now, hanging out in the 80s. Like, I don't think there's ever been a better opportunity to enter Bitcoin if you're on zero, if you have zero allocation. And part of that, I think, is this sort of ongoing battle in terms of people digesting and understanding, like, what is Bitcoin and how should it trade? Is it a risk on speculative asset, or is it a risk off strategic reserve asset? And I think it's the general perception is like it's one or the other, right? Obviously, the Saylors of the world are vouching for it being this reserve asset. Corporations who are adopting it and putting it on their balance sheet are also viewing it as such. But then there's a whole swath of the market, largely more short-term oriented traders and hedge funds, who are still very much sort of looping it in with other risk assets. And so you've seen equities sell off in the past few weeks, and I think that's Bitcoin is still being lumped in with that sort of sentiment and risk off sentiment. And so I think what we're going to see play out over the next several months to years is the pendulum swinging to more and more people every day realizing that, no, this is not a tech equity investment. This is a reserve asset. It's really the most riskless thing you could own in your portfolio. And so I think we're just somewhere in between those two sides. And that's kind of what you're seeing play out in the price action. And, for the past week or so, those more short-term oriented folks have been winning that battle in terms of where the price is headed. But I think there's also just a digestion period that needs to take place, where the U.S. government is coming out and saying it's a reserve asset. You can bet that every central bank around the world, every other government, is taking note of that and saying, well, what's our strategy with Bitcoin, particularly if they have zero Bitcoin today, because then they're somewhere between 100 and 200,000 Bitcoin behind the United States in terms of stacking Bitcoin. And so that's just kind of my takeaway around price action.
Yeah, or go ahead, Liam.
No, I just we also just saw a couple hours ago that MGX made a fairly large investment in Binance. That definitely wasn't unrelated to the U.S. making this announcement. Their other sister company, so MGX, just taking a step back, is UAE state-run investment fund. Mubadala is another one of their funds as well. They invested over 400 change billion in Bitcoin ETFs, which came out in Q4 investment filings. But yeah, there are other countries that, not just individual people, that are definitely taking notice and trying to figure out what their Bitcoin and even crypto strategy is at this time too.
Yeah, that's a separate thread we should chat about, the MGX, and just in general. That's exactly right. Like, that is sovereign exposure at the most, like 40 chess level in my mind, in the sense of you go and you see how there's just natural geopolitical games coming to fruition when it comes to talent aggregating, from the no income tax to other things that are making sovereigns more friendly for innovation and to go there. And so we've seen from SoftBank to the UAE, different large swaths of capital going to try to get exposure into hard and soft tech in the West and then pull it over and get a lot of the data. AI has been this big theme. But to your point, to go take a $2 billion position in one of the largest exchanges is proxy exposure for global exposure to the sector, to crypto, to Bitcoin, because majority of that Bitcoin, that capital is probably going to be held on their balance sheet. I think I would imagine Binance is very much cash flow positive. But really quickly, I want to throw something to you guys because it's going to be a little like polarizing or like just a little bit different in the sense of I don't think there's that many people buying Bitcoin. Like there's a few things. One is I think Brian's absolutely right that very few people hold Bitcoin, and the people that hold Bitcoin that are most likely to sell it are the people that have very heavy exposure to everything. So we're looking at a screen of the total addressable landscape of value, roughly 900 trillion, and Bitcoin sits at 2 trillion. So of course, any sell-off in the traditional markets is going to affect this small asset, especially if what is generally, I think, been understood is a lot of the flows from the ETF have been hedge funds trading, arbing out the basis trade. And this notion of, well, if they have exposure to these other assets, I think it was like reported NVIDIA lost $1 trillion in market cap.
Yeah, something like that.
Yeah, $1 trillion in market cap the past 10 days. I was listening to something. It was only 700 billion that the bailout was in 2008. So 700 billion, that's 700 Jerry Worlds. Think of how long it takes to do Jerry World. This is 1 trillion wiped off of just one stock's market cap. And so point being is that, and we see this like anecdotally outside of individuals, there are very few institutions in large pockets of capital that are really allocating to this asset. At best, they're really trying to figure out like what's their game plan for digital assets and what's the difference between Bitcoin and the rest. And if that's even remotely true, then there's just not much capital coming into this space yet outside of that. So when liquidity markets get constrained, it's natural there would be a sell-off. And I'd go even a step further. It's like joking around, this is hyperbolic, but it's like outside of Michael Saylor, I don't think there's that many people that have actually been buying Bitcoin in size. Like UAE, obviously they've stepped in, but it feels like there's been this consistent bid for 5 years, somebody picking up 50,000 at a clip portions of BTC. But there's not these large, you see it in the filings, there's not that many corporates, there's not many pension funds. I think there's like 2 or 3 in the US. And then the ETF has been that new influx, but there's just not this crazy demand because it comes up a lot in group chats and with clients about who's selling. And I think it's just the reality is there's not really that many people buying as well.
Yeah, that could be part of it. I think the other thing that we've referenced in the past is like the ETF inflows are largely retail. Like I think people conflate those flows and think, oh, the institutions are aping into Bitcoin, when the reality is that it's mostly people in their brokerage accounts that are buying through the ETFs, or even folks that are rotating out of spot Bitcoin and would rather have ETF exposure for various reasons. And so, yeah, I don't disagree with anything you said, Michael. I think what that does make me believe is that, like, again, whether those people are still learning, still educating themselves, or just waiting for a better price, it does feel like a coiled spring in the sense that once those flows do start, I think there could be some explosiveness to the upside. It's just a matter of when, because we know the education is happening. We know there's interest, but I think you're right in that in terms of like real size and allocation, maybe it's not really here yet. Chase, I'm curious if you have any thoughts on the corporate side in particular, because we see headlines every week of new corporate XYZ that has a Bitcoin strategy, but typically those are, it's not meaningful size. It's not at the scale of MSTR, right?
Yeah, right. It's really only MSTR that seems to be buying in size. We saw Rumble announced today. I think Semler bought another chunk today, but these, it's like 12 million here, 14 million there. And it's not clear how long they can even keep up that pace before they kind of run out of dry powder. So, yeah, I think, to Michael's point, we talk to a lot of companies and, we're kind of like a light to the moth. If you're a business that's interested in a Bitcoin treasury, chances are, we've met you or talked to somebody within the business. And yeah, we're definitely having more conversations than ever, but it's still a big lift within a lot of these businesses to actually get to the allocation. So yeah, I see the growth happening, but I think definitely still in the early stages of the corporate adoption growth.
Yeah, and I think like the best mental model to think about it is like for every Saylor, there's just the majority of that base or that sector that has no exposure interested looking at it. For every Ricardo Salinas, that's 80%. There's the majority that are in the same way. And for every one of us, whatever the like per capita number that we look at, it's a very similar thing. For like, we're just in this like bubble that we just assume everyone's going, but we know the end state. Like everyone ends up here because it's just the hardest money. So you want to preserve it. But the market coming to that consensus on Bitcoin versus crypto. And then really the hard part, as we all know, going through this is how do you go from just like immaterial exposure to material exposure? Like, because that's a big leap, right? To take physical world value that you have, including the dollars you can actually touch, and then putting them into this like thing that you can't touch. It's actually kind of a wild thing that I think we forget. And so for a corporate to go from 0.1% to what Saylor's doing is literally like going to another planet. And so it takes time to get there.
Yeah, I think Rumble.
Michael, we're going to Mars. Sorry, Liam. Michael, we're going to Mars. Okay, get on board.
It is true. We are going to Mars, and that's partially why that 1 million and 2 million get it gets the engagement, because everyone feels crazy that they're going to Mars. So it's always helpful to have somebody let them know that we're still on the right path, because it gets real bumpy when you go up that high.
But yeah, I mean, to your point, I think Rumble came out with a filing today and said they bought like 14 million or something worth of Bitcoin for diversification purposes, not understanding that like, okay, the goal is to acquire more Bitcoin. It's not like, okay, if everything in the world goes to shit and there's like a debt crisis, then Bitcoin becomes valuable. It's like, no, Bitcoin is mathematically guaranteed to become more valuable over time, just because there will be more debasement. There's different properties to this asset than everything else out there, and it's the best store of value over time. And it's just going to take a long time for most capital allocators to get there.
Yeah. That's absolutely right. I mean, you compare and contrast everything we just said with, so Tim and I were down in DC yesterday for the Bitcoin for America conference hosted by the Bitcoin Policy Institute. And it was hard not to be like insanely bullish at that conference and post it. I'm sure Tim has some thoughts, but just from my vantage, it was a very high signal event, well orchestrated. So shout out to BPI for putting on a concise, compact event. It was within, a single morning from sort of 8 a.m. to 1 p.m. with Saylor doing a presentation. And listen, I've heard Saylor do what seems like countless presentations at this point, but his one yesterday was I thought particularly good. There were some new slides in there. I found it interesting that he added a slide that sort of referenced like stablecoins and stablecoin growth. And so I think it was, this presentation was very much tailored to politicians and thinking about Bitcoin as a strategic asset for America. But he did add some color around, why stablecoins I think are going to be a big part of this administration's sort of plan around their embrace of digital assets, and Sachs and Bessent have echoed those sentiments as well. So I don't know if it was just a nod to them or him, really just talking about stablecoins for, I think, one of the first times ever. I found that somewhat interesting. But like I said, it was a very bullish day, constructive on all fronts. And the excitement and the enthusiasm from the people there was pretty palpable. But Tim, I don't know if you had any takeaways from the day.
Yeah. I thought it was notable, just the people in the room, right? Like, we're getting our name tags, and I see Anthony, and I'm like, Anthony, you don't come to anything. He's like, yeah, they really said, just come to this one. You had Max Kaiser and Stacy, and I mean, they live in El Salvador. So I don't know. I was just like, is this a bigger deal than I thought? So yeah, I thought definitely good vibes, definitely great orchestration by BPI. I mean, when you see these videos, they almost don't need cut down, right? You have Andrew Hones up there and like sticking to like a 10-minute presentation. Like when I see it on social media, I'm like, did they cut this down? No, it's like a 10-minute presentation, and like every single presenter just knocked it out of the park. So yeah, no, I thought it was a great event. And yeah, I mean, not to repeat myself, but right, reintroducing the Bitcoin bill, having it in both the House and the Senate, having co-sponsors and a mention of like additional people that they're working on to also add as co-sponsors to those bills. So yeah, in private conversations, it's just kind of like, I think they feel like time is of the essence, not because of necessarily trying to buy Bitcoin at a lower price, but just between now and midterms, now is the best time to get momentum and try to get something done. So hopefully we'll continue going in a constructive direction.
One thing that's super positive, you know, the BPI guys are great. It looked like a fantastic lineup and curated group. That there's a Bitcoin advocacy group that's serious. There's a lot of advocacy groups. They're doing good work. The reality is, and it's just a reality of like the majority of capital that's expendable from a business perspective is with crypto companies. And because they have big marketing teams and big, you know, they've raised capital, so advocacy groups have generally had to engage on both sides. It's just self-preservation. Like, do you want to live or do you want to die by being, you know, sticking to Bitcoin only? Like, that's just a reality of what's happened the past 5 years. And it's not a good or bad thing. It just is what it is. But when you have that, you naturally have to sometimes conflate the digital asset space and talk about it, i.e. crypto ball and, you know, all of that. But it's just super bullish and positive from an education perspective that there's this group that's able to focus solely on Bitcoin, go very deep there. Obviously, some of the mechanics that we talked about with the executive order and the strategic reserve further outline that, but that's just how we get to like past this carnage that I think we all kind of have anxiety knowing that there's still going to be people that lose assets. There's still going to be speculation. And so that's like a big takeaway for me is just like it's starting to just differentiate. It's still going to take time, but it's a positive direction versus not having that at all.
Yeah, I think one of the most misunderstood aspects of the executive order is how it provides cover to the Lummis Act, the Bitcoin Act. So, like, this is Trump getting the Republican Party in line. And I think Sachs has been pretty clever about trying to make sure that anything done on this front, whether Bitcoin or digital assets, is bipartisan so that it can be lasting. And I think that the EO didn't go so far as to, you know, mention active purchases because its goal was really just to set up the Bitcoin Act to pass in a bipartisan way and be that lasting regulation. And I think that's what's misunderstood. I think that SBR increased the probability of state Bitcoin treasuries and the Bitcoin Act, and not to mention, obviously, other nation states getting in the game. And I think the other thing that most Bitcoiners didn't appreciate, and yeah, there's a big, you know, general market drawdown, but I think part of the Bitcoin sentiment drawdown as well is this idea of the net neutral budget and how people just simply see that as no new buying and don't understand that somebody like Howard Lutnick can do a massive amount of damage with the U.S. government's balance sheet in a net neutral way.
Yeah, it's a really good point. I think there's a number of tools in the toolbox that I personally trust Howard and Scott Bessent to be able to leverage to acquire Bitcoin in a budget neutral way. Michael, I wanted to bring up a chart which we talked about a few weeks ago.
You have to be very careful in doing this because I'm going to make you a bet after, and then you're going to owe me money. I haven't actually called it out because so we're going to do the first.
Well, I've
bet.
been right thus far. I think it's been. We probably talked about it back around here, and you were calling the top on Bitcoin dominance, and we've continued to grind upwards.
Yeah, so this is what happens when people like to get a little clever and pull this up prematurely versus you can pick a time frame, whether it's end of 2025, you know, let's call it middle of 2026. This chart will reverse, and whatever we bet here, you'll owe me. I didn't bring it up because I didn't want you to be like, oh, I got it. I thought you'd be. I thought, Brian, you'd be smarter than that.
It's not over. I'm just saying. I just wanted to update the audience, update our listeners on the status of our little quarrel here.
Yeah, I think ultimately, like, it makes complete sense in what's happening simply because Bitcoin is a safe haven in the crypto sphere. So if there's a deleveraging and there's a liquidity flight, well, people are going to go to the safe asset, and then you're going to have large amounts of capital move out of the crypto assets. And so this makes sense. the idea is that if we are going to have liquidity, interest rates go down, we're going to have this asset class go from, let's call it, we're at 3 trillion today. I'm not really sure if it shows it on this chart. We end up at the end of the cycle. I mean, Tim thinks we're going to end up at whatever 20, that's like whatever number that is, like 20 plus trillion total. But let's just say we end up at 10 trillion from here. Bitcoin sits at, well, I'm not going to do the math here, but like it's 62% now. And we end up at 10 trillion. Bitcoin's going to sit at like less than 50% of that is the directional bet. So we'll come up with the terms and we'll come back because you're going to have to
I think what that necessitates though is a meaningful bid for X Bitcoin assets, which like I just don't necessarily see if like the primary bid that we're going to see over the next 12 months is like corporate and nation state level buying. They're not buying Ethereum. They're not buying XRP.
Yeah, it's the first part of that. The second part is we have 24/7 global crypto markets. And as the price appreciates, it's the ultimate barometer for awareness, which will have traders come in and step in. And if they make a little money on BTC, that's a natural cycle into alts. And then people will look at alts because they have the unit bias and they just will go in and they won't understand all of this because this is at the like very edges of nuance and understanding like the market mechanics of where the liquidity goes.
Yeah, I mean, I don't disagree with that line of thinking. Where I think the difference might be is that
you just have to bet. You don't. It's just like when somebody loses and somebody wins money because like it's really that straightforward. So we got to call it out because this is what happens. Like if you want to bring up charts and just say it, you got to pick. Liam, you get to pick the amount of sats, and then Brian, you get to pick the date that we will look at the dominance. And then I guess what is it that like I just said dominance is going to lower, right, from here, and Brian said it's going to go higher. So we can look back at the. So what are we at today?
It's at like 62.
Okay.
Michael, is that a short-term call or long-term? Do you think that Bitcoin does just eat away at dominance forever?
Oh yeah, I mean long-term, Bitcoin eats everything. Yeah. I'm not crazy. It's just. But we'll come back to that because it's important to know who's right and who's wrong. Chase, I wanted to go back to something because Tim, I think you talk to Chase a lot, so you know this. Like, I know you're the MSTR bull, but I think Chase might literally. I think he has an MSTR pillow. I think his newborn might be named Michael. I think there's some serious things going on there. I mean, he's literally a CEO of a Bitcoin treasury company with his plans to help Michael Saylor actually custody it the right way. So there's a lot that Chase is writing on in the treasury space. And so I'm curious. Brian earlier said something interesting about stables and Saylor. And I know I've seen it like cursory, right? You flick through enough Twitter before your mind turns to mush and you see like something about, becoming a bank and this notion of stables. And I've always been interested in like, if you can differentiate by backing it with some BTC and all of that, like, do you think there's anything there? Have you thought about it? I know you have, so I'm kind of leading you, but curious like what you think about stables and MSTR.
That's to me, or that's to Tim.
Both of us. You go first, Jay.
Michael
one and then Michael two.
Okay, yeah, I'll start. Saylor has talked about stables before. Actually, his thesis is that Bitcoin is not a currency; it's digital capital. And so, whether he actually believes that is one thing, versus that is the position he's taking so that he can keep governments from squashing Bitcoin and getting them to believe that there are parallel paths for both to exist. That's another question. I tend to think that he would believe that long-term it does eventually become the medium of exchange as well. But I think he's kind of hinted at this before, that it's basically like, pick your battles. If you don't have to fight the government, then don't fight the government.
That makes sense. I guess I was more curious of, do you think he gets involved in stables from an issuer perspective, like MSTR turns into a bank and that they have that's where I thought that's where I was going with it.
Oh, okay. I mean, they definitely seem to be positioning themselves as the Bitcoin bank. Some would argue that even the new logo is like just a middle logo on the way to being strategy bank. I could see that. You know, Saylor believes that capital, its purpose is to be held and lent out to folks who want to use it to create productive, assets in society. And he seems to be in the camp that banks are good so long as they stick to just storing and lending out capital in responsible ways. And so I think he wants to be the Bitcoin bank, but I also do think that that could be a long way away.
You got anything for us, Timbo?
So on my phone, I don't see anything on my screen. So you probably see Timbo. Does it say anything else? Is it like Timbo Slice or?
It's just Timbo. It's Timbo, and then there's just a bright orange tie right next to it.
Oh, okay. It's on brand except for the bow part. Yeah, everything that Chase said, it's a continuation of stablecoins can export the U.S. dollar, Bitcoin's not competing with the U.S. dollar, all of those themes, definitely. And I think what I've picked up on from, several conversations is that, MSTR has iterated their way to this point and they'll continue to. So I don't think anything's off the table, but there's definitely a focus right now on just stacking pristine collateral.
Nice.
Yeah. One other thing just to note from Saylor's presentation yesterday that some folks on X picked up on, and I kind of did a double take when I heard it live. And it was, a quasi near-term price prediction from Saylor, which, he doesn't often do, but he brought up the chart that shows the largest assets in the world. Bitcoin is currently 8th largest asset in the world. And he said, currently it's 8th. It'll be the largest asset in the world within the next 4 to 8 months.
Yeah. Got it. Liam, did you have anything on that? Because I think the OCC stuff would be relevant given we're talking about banks.
I'm interested in that too. Saylor has very repeatedly said, you never sell your Bitcoin. And so I would be interested in like the mechanics of him actually doing something with a bank, just given he has very, very repeatedly say he doesn't really want to do anything with his existing capital. So that would need to be all through new financing, which is also accretive to his Bitcoin strategy. I don't really see that in the near term unless he kind of changes his messaging a bit.
I guess one last thing I'll add here is he's talked about how because Bitcoin is digital capital, that it can be lent out in any amount to anyone, anywhere in the world at a moment's notice and then, returned back to you. So I think he sees this future of like micro lending at light speed anywhere in the world.
Yeah, I think he's more likely to lend out his Bitcoin in order to get some additional Bitcoin yield on top of it. We know that there are some risks associated with that, but I know like on Saifedean's podcast in the past, he's talked about that. It'll be interesting to see how he gets comfortable doing that.
Yep, that makes sense. And actually, maybe before the OCC stuff, we can do some breaking news with our buddy Tim announcing coming on as an advisor to early riders. I think Tim has to run at the top of the hour, so we can chat a little bit about that. I think, Tim, since we first started chatting, you've seen more and more about Bitcoin as the hurdle rate and more of this in the lexicon and the zeitgeist, understanding the cost of capital. There is a cost of capital now, and it's not the Fed funds rate, but it's the hardest asset known to man. So it's exciting to bring you on as an advisor to early riders. And what Chase said, referencing micro transaction and banking, there's going to be no shortage of businesses that are going to adopt Bitcoin on behalf of their treasury, that are going to build net new businesses. And you've been established in a platform with Bitcoin treasuries. You're seeing new entrepreneurs, existing entrepreneurs looking to break in this space. So super pumped to get you involved further in what we're building, and curious if you have anything to share.
Yeah, no, I'm very excited about the opportunity, and is just, I don't know that I'd heard Bitcoin as a hurdle rate that often, let alone a theme, until I was introduced to early riders, right? The first ever Bitcoin denominated venture firm. And since I started bringing it up in conversations, on panels, now it's like Matt Cole and Vivek and like everybody and their brothers, like Bitcoin is the hurdle rate. I'm like, what? We started this thing a few months ago, as far as like maybe that narrative. Or I'm just, right, you drive a red car, you see all the red cars, I don't know. But yeah, no, we're obviously early. We don't need to spend a lot of time on that, but private companies, public companies, I'm having conversations almost daily now with either CEOs, business owners, private companies that are all working with companies that want to at least understand what's going on and consider first buying Bitcoin for themselves and then considering putting Bitcoin on the balance sheet, which is obviously easier as a private company, and then the publics, I think, are going to be slower than you would think, but not that far away.
Yeah.
Either.
Yeah, Chase, curious your thoughts here, and open it to the group, but Chase, you're closest to what we're doing as a portfolio company, but also talking with different companies. And I think that there's like two formats to Bitcoin's the hurdle rate. There's the discussing it because it's a good it's a good message, right? Like Bitcoin's a hurdle rate, you should benchmark against that. But then it's fundamentally different when you really think about like not only building to that, like returning more Bitcoin back to yourself as a business owner or your shareholders, Bitcoin, not like Bitcoin per share, but the actual underlying, how it affects your business decisions from an efficiency standpoint. Because I think that's like what's implied in that is, okay, so Bitcoin's your hurdle rate, you bring on Bitcoin as a capital, as a store of value, shares go up. And then there's this like implied notion, and I think it's true, or I know it's true, that like over time that will be incepted into the mechanics of how the company's built and it'll make it more efficient. But from there to that point is more, it's been said as more theoretical versus what we're talking about is like in practice, what we build at OnRamp, how Acropolis is being built, how actual companies bring the capital on, and they're ultimately looking to deliver Bitcoin back, from whether it's early riders back to LPs or Acropolis back to early riders from an investment perspective. So curious how you just think about it and how you've seen it in the market, because I think it's kind of conflated of it's a sexy thing to say Bitcoin's a hurdle rate. It's completely different. I joke, and it's like saying I want a six pack and then go into the buffet versus like saying I want a six pack and then you have to do the hard thing and actually have to go to the gym and do the deal. And those are like fundamentally different things. And it's going to take a while for the market to realize who's just saying it and then who's actually producing the results.
Yeah, I guess my thoughts here is that I was before I found Bitcoin, I was kind of a believer in the lean startup methodology and kind of a student of startups and a fan of things like Bezos making every new employee, go find a door and build their own desk and these types of things to like try to instill cost savings and efficiency right out of the gate. And you've seen the pictures of Bezos in front of the Amazon sign, which is just like a little banner that he spray painted, and he was proud of that banner, right? Because it's showing that I didn't spend $1,000 for some graphic banner on my wall. This is good enough. And I think that what that methodology kind of missed was that it didn't have a true opportunity cost. So it's like, okay, yeah, you're not spending too much money to build the business, but what is the actual opportunity cost? And I think with Bitcoin as the hurdle rate, it inherently lends itself to the lean startup methodology. But it also expressly states, what the opportunity cost is with each incremental dollar. And so, yeah, I obviously, I run my life that way before coming to Acropolis, and tried to run my businesses that way as well. But to have a VC partner in early riders that is like expressly giving me the green light to hold 100% of the business's capital in a Bitcoin treasury, and to like weigh every growth decision against that, every hiring decision against that, it's incredibly aligning.
Yeah, it's a really good point around, effectively it moves it away from being something theoretical in terms of like capital discipline into something tangible. Where,
exactly.
Now, obviously, past performance is not indicative of future results. We can't predict the price of Bitcoin, but what we know about it from a monetary property perspective, we can have pretty good assurances that it's going to be sound money into the future, as it has been for its entire history. And so it gives you this anchor to tie to tether to. And so it's not just this theoretical game of, well, I'm saving money here by, Bezos not making the sign. It's like, well, what are you doing with the money that you saved on that? Like, that's still a question. And so in some sense, prior to Bitcoin existing, that opportunity cost was always theoretical, because you could say, I'm going to go invest in XYZ thing. It's going to produce XYZ return. And so it moves it to a more of a tethered reality. And the other thing I'll mention is Vivek was a keynote speaker at the event yesterday, and his whole speech was on this. It was completely about Bitcoin being the hurdle rate and why that actually sort of catalyzes capital discipline. And part of his theory too was like, in a world where interest rates are no longer zero, like, you do need to think more critically about opportunity costs and hurdle rates. To me, it's irrelevant what interest rates are in terms of Bitcoin being the hurdle rate, but that was part of his thesis, was like, we're no longer in a ZERP era, so you have to think about this differently. And I think that's partly true, but we're in a Bitcoin era now, and so you have to think about the entire spectrum differently, because that is the real opportunity cost.
Yeah, I think what a lot of people miss is it goes back to the conviction that I think we all have in Bitcoin, in the sense of, if Bitcoin credibly enforces 21 million hard cap supply, then it ultimately wins his money. And if that's true, then ultimately Bitcoin being the hurdle rate is a derivative of that, meaning that everyone that invests their capital will be benchmarking it against their own holdings, because it makes zero sense to give up the Bitcoin if you're not going to get more Bitcoin in return, whether it's today at today's prices, or if Bitcoin's nominal purchasing power increases at 3 to 5% on an annualized basis because of GDP growth. Well, then you're going to need that in return. And so if that's true, then everything else that will be built will be based on that. And this goes back to, like, we have different pieces to put together, but one of them is just like, well, what does investment look like in a Bitcoin standard? And ultimately it means that more people are saving. More people saving means less people are spending frivolously, because there's a lot of things that exist in the world today that shouldn't. Those people now have to go find real jobs that produce value, that lowers the cost of production for everything that is like fundamental to society, which allows for more saving. And then you put that saving back into credible things. And it's not to say that capital won't be destroyed, because that's just how humans operate. But that's the basis of it. And anybody that says Bitcoin's the hurdle rate, like, won't tell you that. They'll tell you, like, Bitcoin's the hurdle rate because it's going up and I gotta do this crazy shit, and like everyone screams about it. But there's like a fundamental basis of like, this is how society will run and operate if that is the metric that they need to get returned, if they're going to relinquish that underlying asset. And then every decision point past that, when you're a business owner, has to be the same, similar thing to our personal balance sheets. It's like, well, why am I going to spend this? Unless it's obviously for like lifestyle reasons, but businesses are fundamentally different than, your life.
Yeah, no, absolutely. And to a certain extent, you kind of have to live it, I think, is part of what you're alluding to, of it's easy to talk about it. It's much harder to actually do it and implement, grow a business on a Bitcoin standard. That's when you actually internalize what we mean by Bitcoin is the hurdle rate. And until you do that, it's nice to say, but it's very different operating in that mode.
There's a lot of companies and venture funds that have like deployed and burned capital, laid off folks. And you think about, like, if you raised, I don't know, $100 million and you go and look at the amount of BTC, like, this is another piece we have to put together, is like, really the future metrics will not be how much dollars you raise. It'll be how much BTC you raise. And it's actually going to be the least amount of BTC you raise is the benefit, less the more dollars you raise, because the more dollars you raise is actually the more BTC you have to outperform. So raising $100 million the past couple of years means you, like, let's call it 3,000 or whatever number of BTC. Chase, you sound excited. You look excited, so I'll let you go. But the second part to that will translate to companies, because it'll be less amount in the number of people you have. And we all know it's going to go back to less employees, but it's going to be more of amount of BTC per employee, like amount of BTC revenue per employee. So there's these just like fundamental things that are drastically going to change the landscape. And that, again, it goes back to the 6-pack. Like, you could talk about it, but to actually do it is fundamentally different thing. And the only way you can do it is actually by like actually doing it, like building the businesses in that way, because that's the hard part, is developing that process.
Yeah, I just wanted to basically double tap that in the sense that you said you're not going to be we're not going to be celebrating like, oh, so and so company raised a $2 million seed round. What you're going to do is you're going to say, okay, well, if they had allocated to Bitcoin immediately, whether they did or not, maybe they raised from early riders and they actually raised in Bitcoin, or what is the amount of Bitcoin that they could have acquired at that start date? Again, Bitcoin is the hurdle rate, right? Because if early riders invest in Acropolis and we have a certain amount of Bitcoin to start with, that is the hurdle rate because we need to hurdle above that before we can return capital to investors. So like Bitcoin is the hurdle rate all the way from the micro level to the macro level and for individuals and businesses. So it's just another way of thinking about Bitcoin as the hurdle rate is you have to return more capital than the Bitcoin that was allocated to you initially.
Yeah, and that's via enterprise value or dividends, right? Because you have you basically have a call option on the equity value. This is like a cosmic angle of all this, but the way I see this all is similar to like when you think about what makes Bitcoin work, it's because there's a token attributed and the incentive model across miners, nodes, and participants are tied to that token. And so like the most efficient energy sources are tied to how Bitcoin's leveraged, right? Because you naturally want that token. And so you're going to go there in the same way that the only use case for a blockchain is to manage that token via, consensus and all what we're talking about here. It's very similar to like humanity, like how we'll all operate is the way society will all like operate at the most efficient scale is once you have the token that has a finite supply.
Yeah. I mean, we've never had that, right? We were pretty close with gold for thousands of years, but even that wasn't perfect scarcity. And so I think that's part of the learning that will occur over the next several decades. The appreciation of absolute scarcity. I think the four of us on this call are in the extreme minority of even grasping what that really means.
And one last part, like Chase, I think you'll appreciate it. I think Liam's heard this and Brian definitely has because he was at the dinner. We were with a very prominent venture capitalist in the space and he was really enamored by OnRamp. And I was like, you want to know something even cooler? Is like, we run the only Bitcoin denominated venture fund in the ecosystem. He's like, tell me more. And then so explain, just like pretty simply, like, well, if me and you start a business and we raise $1 million or $100 million, we'll just build a more efficient business inherently, which means a better business with $1 million than $100 million. And then it was like, well, let's take a step back. Now let's play it back where we raise $1 million in USD or $1 million in BTC. Now think about how great of a business we run because it's really simple. And again, nobody can talk you through this unless they've done it. But it's like, well, me and you, Chase, we start a business, we raise $1 million BTC or dollars. We do it in dollars. Maybe you take that extra higher because 8 to 10, you want to spend some time with the family. But if you give up that BTC for the high, if you're holding a BTC, you give up that for the higher. Well, now you've lost that purchasing power appreciation versus suck it up, figure out the SEO strategy, go on. And that optimization, it's not to say you don't hire, but and if you do need to hire, then you're ultimately going to find not only the best person, you're going to find the person that aligns with those ethos as well, because that they want that token as well. So when they come in, they're looking for equity because if you're trying to get more of that token, then that asset, then they're going to come in and then it aligns at the highest peak who should be as part of your team because they're aligned with that. So they're going to be the best performer and get to it. It's like a beautiful system. And that's truly what like Bitcoin's a hurdle rate like means.
Yeah, especially if you're a Bitcoin only business, so you're attracting Bitcoin talent. When they come on board, if they're getting equity, they don't want to drain the company's Bitcoin treasury as they come on because it's counterproductive because they want to own points in a business that sits on that treasury for as long as possible. So they come in and they're like incredibly willing to work with you on compensation structure because there's an alignment in a way that you just don't see in other businesses.
That's exactly right. And that's how you build the best businesses because you can't build a great business without great people. And great people want to do great things. And like it's the best heuristic when it comes to just that full alignment across the board. There's other anecdotes to share, but I know we've talked about this a lot. But yeah, it's super exciting because once you talk to the right people and they get it, they're like, holy crap, they have to be a part of it. So if you're ever interested in building on a Bitcoin standard or getting involved with what we do, you should reach out.
Absolutely. Well, anything else we wanted to cover? Liam, was there anything you wanted to mention around the OCC news or banks getting the green light to enter the space?
I mean, we can continue to talk about this all day. There are going to be a ton more banks that really want to put Bitcoin and even stable coins. I think Bank of America talked about issuing their own stable coin. I don't think that they're going to outperform Tether, but we'll see. But yeah, there are going to be more and more people that want to hold Bitcoin and broader crypto on their balance sheet. We'll see how they aim to do it. I think they're going to be very slow to move. I think they have a lot of compliance boxes they need to check. But at the end of the day, I think they're just going to get a broader audience more comfortable with the asset as a whole, and we're going to continue to see adoption tick up just because there are just realistically a lot of people out there that want Bitcoin exposure but are too lazy to open up a new account.
I personally think it's the most bullish. I'll let you go, Brian, but I think it's the most bullish thing for all of this, independent of SPR or everything else.
Just banks being able to enter the space and not having to worry about regulatory overhead or.
Yeah, exactly. Simply because individuals, family offices, and everyone in between that leverages a bank just wants to deal with their bank for financial access to assets. And yeah,
right. It lowers the friction of, because the alternative, right, is you got to go find a crypto native firm and vet them and, figure out how to partner with them or integrate their solutions. And so I think it greatly reduces that barrier and those frictions. The only other thing I wanted to mention on the stables topic was, if we didn't have enough signals already that the United States really wants to embrace stables to sort of assert or continue to assert dollar dominance, Paolo, the CEO of Tether, was at the conference yesterday. It's the first time he's ever been to the United States. And so I think it's pretty clear, he feels comfortable enough with this administration to come to the United States for the first time. So I thought that was an interesting signal as well.
Well, he has his uncle Lutnick there, so if he gets in jail or they just bail him out, he'll be good. Yeah, I think there's inherent or implicit not green light, but it's saying that this thing's not a scam or Ponzi, right? The administration being friendly has been, anybody in this ecosystem has seen the past 8 weeks has literally been night and day from the interest, from specifically on the closer to the regulatory bodies. So when you think about RAAs and have to deal with the SEC, and then from the banks dealing with the OCC and other federal regulators, this shifting in tone from an administration is just completely taken the wind out of the stigma that this is a nuclear asset or radioactive asset and all of that. And so then once a bank offers it, it's one part friction, but it's honestly, in my mind, one part a blessing from their financial institution that this is okay. And I met with one yesterday, and it's interesting because it's going to happen in the same way. They were they're super sophisticated for a bank. They've been talking to the regulators. They've been trying to get in for a while, 5 years, really sharp guys. And we talked about this earlier today, Brian, and Chase, you probably feel this as well. There's a barbell when it comes to understanding what we're talking about here in multi-institution, specifically multi-institution custody. If you're kind of net new to the space, it's that's inherently seems safer. 3 institutions safeguarding the asset. And then on the other side of that, when you're outside, you've gone through the fire and you're on the other side and you're what you would think of as sophisticated because you're still involved and you haven't been burned. You're oh, wait, this is how it all goes, right? It's that middle crowd that's where you kind of fall into the trap of oh, it's okay, just single party custody and all the things. And these guys were on the other end of it. They've seen it. They've seen the risk. All they're thinking about is risk, right? And they were just so ecstatic that they had stayed close to this asset for all these years to understand where the traps are, to understand what they need to build, because they're all about trust. The second they lose it, they lose their whole bank. And so it was a great conversation, really great. But point being is this similar with RIAs, right? They're all private businesses. They're all looking to attract capital, attract AUM. It's going to be a land grab. It's an insane opportunity from RIAs to banks. They're very similar kind of cohorts, and they're trying to attract capital and differentiate. But the other side of that, the bearish, sad part is a lot of these people are or have been caught flat-footed, and they will continue to be because they just thought this was all a Ponzi and they never had to worry about it. And I was telling them at 150, right, just like to call it a double from here, they're all just going to make a bunch of mistakes because now they're just going to be banging down the door from their shareholders, from their clients. And that's how you end up with all these crazy like Frankenstein setups. And that's when you end up with another deleveraging because you're offering yield and all this crap. So it's bullish and bearish at the same time because it's just a steep learning curve. But yeah, just wanted to share that.
It's a good point on the getting caught flat-footed. Like, I think you could make a parallel to, you know, how now there was obviously other factors, but like what you would think of as sophisticated investment firms and allocators who aped into FTX, right? Because they felt like they needed to do something in the sort of early innings of that bull run. And so they didn't really do any diligence, or if they did, it was cursory at best. And so I think you'll see different flavors of that this time around, to your point, for those late movers who are going to move quickly, but likely too quickly to actually think about it critically.
Yeah, and this is how you see MIC as a standard, basically, because you get one more cycle and then you get a bunch of things blow up and you get regulatory consumer protection in place because you can't have a single party custodian that's a black box custody it. Sorry, Leo.
No, I was just going to say the last thing on the banks being able to custody is like, this is going to be a massive catalyst for corporate adoption of Bitcoin. Corporates that have been around for hundreds of years have had relationships with their same JP Morgans. They've done all their due diligence, making sure their processes are correct, and they've just been really comfortable with them. So when they start to offer Bitcoin, it's going to be a natural relationship rather than trying to build a whole new relationship with a different financial partner. So I think we're going to see not just individual, but also corporate adoption, maybe even accelerate faster than individual adoption in terms of percentage basis.
Yeah, and maybe I would just chime in and kind of second what Michael's stance was, that perhaps this is even more bullish than the SBR. And the reason I would agree is that banks being able to custody Bitcoin is the starting, down the path towards lending and borrowing, which means borrowing against your Bitcoin at low enough rates that nobody ever has to sell their Bitcoin again. And if the value of Bitcoin is its scarcity, well, the SBR creates demand for Bitcoin. But if we can literally, improve the scarcity aspects of Bitcoin to the point where nobody is ever even selling anymore, that's more bullish than nation state adoption.
Yeah, you know what that just reminded me of is anybody that's ever like talked to or dealt with like wealthy people in this space or just in life, they don't want to ever catch a falling knife. They're happy to see the asset fall and then catch it back on the upswing. And I think of Coinbase or a digital native firm as their version of catching a falling knife in the larger picture, right? If it's a family office and somebody's worth, and personally can be worth 10 million plus, family office 10 to a billion, whatever the number is. They're not thinking about this outside of 3 to 5%, if that. And so that version of catching a falling knife on a third-party custodian that goes to zero, it's like a gnat. It's like, why would I want to put myself in that position? But if it's their bank, then it's like, well, this isn't me catching a falling knife. This is like the market has priced in that this is not going away. I'm not going to jail for it. They're not going to ban it. And now I can just get my 5% exposure. And we all know that's the journey down, like, material exposure. But I think that's a big embedded component to this is most people aren't like us just trying to like preserve our wealth so we can buy a house and all the things that millennials have just had to deal with because of the debasement of currency. Like they're kind of okay. They don't feel it in the same way.
Yeah, 100%. Well said, boys.
Before we jump, Ryan, part of this was just I wanted to hear kind of like Chase, anything you want to share. I know there's been an insane amount of traction and interest across the board from companies. So would love to just hear from like the multinationals and what they're been interested in, the smaller companies, and just like kind of an update if you want to share.
Yeah, sure. So we're seeing a lot of interest from folks in the commodity world. So whether they're dealing in oil, gas, minerals, royalties on any of those, gold. So we're really excited about the fact that we're positioned in Austin, Texas as our headquarters, because it does seem like that was really smart looking back on it, based on all the interest we're seeing in the commodity space, commodity type businesses. They seem to really be grokking this asset class and the urgency around acquiring it for their treasuries better than most other businesses. And then we're also, I kind of called this when I first came on board, but I'm pleasantly surprised to see that it's, been the case. We're seeing a lot of interest in capital markets activity for companies that really do want to either borrow against existing assets, buy Bitcoin and then borrow against it, raise equity rounds of capital to buy Bitcoin. So we are definitely going to be ramping up the capital markets activity over the next 6 to 12 months. We're bringing on some really excellent folks to the team to do exactly that. And what I'm excited about as somebody that's running the business at Acropolis, like this is not to the benefit of all the clients so much as to the benefit of Acropolis, is that as we attract AUM into our multi-institution custody setup, we can actually then go help grow that AUM through the capital markets activities and actually take transaction fees on that as well. So it's a really exciting time at Acropolis for the business. And then, we're just seeing more and more conversations with higher and higher quality businesses.
Yeah, the thing I'm most excited about and curious how you think about it is just this notion that like the only thing really scarcer, obviously time than Bitcoin, is really like the human capital that's done the work. Yeah. And that merging of capital markets, understanding of Bitcoin, and being able, and this is like kind of how I think it's all of our thesis is about like Wall Street and how they're inevitably not going to make it outside of this because it's just a different asset, has to be treated in a different way. How you guys can step in to really provide that, outsource Bitcoin strategy officer to support, whether it's from like external comms to internal comms, right? Because you still have to drive the consensus all the way to how do you think about accretive financing, or just like literally the most simplest form of like how do you educate about custody and where the trade-off's going to be. So just curious like how that's been going and anything on that lens you want to share.
Yeah, and we kind of refer to this all as air cover as a service. So one thing that's been really interesting to see is how a single orange-pilled executive at the company will kind of set the consultation with Acropolis. He'll bring on either higher-ups or other team members that he needs to build consensus with on the Bitcoin Treasury strategy. And the call literally starts with, hey, this is Acropolis. I'm bringing you guys in because I'm the crazy Bitcoiner here, and I want them to know that other serious people, believe in this strategy. And that's actually how a lot of times the conversation starts.
Yeah. It's so interesting from the micro example of us and our family all the way to corporates and probably even sovereigns, right? It just requires some other crazy people to help tell the story to drive validation.
How you build consensus. Chase, where can people find out more, or who should they reach out to if they want to learn more about Acropolis?
Well, definitely go to acropolistreasury.com and you can book a consultation with us there. If you want to find me, it's at Chase Palmieri on Twitter. Or email me to chase@acropolistreasury.com. Happy to speak to any business of any size, whether you're planning on allocating to Bitcoin today or next year. Happy to start building that relationship.
Awesome. Well, it might be a good place to market, boys. Thanks for chatting.
It's a great one. Later, guys.
All right.
Thanks.
Later, boys.
Thanks. See ya.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that on-ramp media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.